or its investment and banking business. Now, it might not be autumn in many parts of the world, but at the beginning of September, there's always a bit of fragility about the equity markets. The first mad Wall Street crash was in the autumn of 1929. The others, in 1987, 2001, 2008, all happened in September and October. The causes were different. This time, there's a worry about the level of debt as traders borrow record amounts to invest in rising markets, and add in the fact that August volumes were at their lowest for 15 years. Any moves on a thin market tend to look very scary. Are these jitters justifiable? I'm joined by Yannick Naud again from Sturgeon Capital. We always feel those jitters, don't we, in the autumn?
Yes.
I ask the question, justified right now?
Well, it's true that historically, when you have a bull market in August with very, very low volume, it doesn't follow through in September. That's what we have seen in previous years. So it's not a very good sign. It's always very dangerous to say this time is different, but it's very possible that this time the things could be slightly different. On the volume, the fact that in August the volume were very low was not specific to August. We have seen a decrease of the volume since February. There could be many reasons. Maybe there's less company share buyback, for example, or bank have a smaller balance sheet to have asset in outstanding in order to be market maker. There's a lot of different ways to explain that. But it's true that so far this year, volume have been low, and in August as well.
But what about these traders who've been borrowing money to invest? You know, when the margin call comes in, presumably we'll learn a little more about how fragile it is.
Exactly. Usually it's always coming from leverage money. When you invest with leverage, you're more susceptible to market move. Right now, since the beginning of the year, we have seen very, very low volatility on every asset class, and especially in equity. So it's true that in order to generate return, more and more investors will tend to borrow, because historically the volatility has been very low, and therefore the chance of losing everything very quickly is very low. If we see a big change in terms of volatility, that will be the trigger. That could be the trigger event to something more negative.
To support your view, it has to be said the fear index, the famous VIX index, is actually at its lowest, isn't it, for some time?
If you look at the VIX, it's extremely low. If you look at, for example, oil volatility, which is usually very high, and especially when there's a lot of geopolitical problem like we have now pretty much everywhere, the oil volatility is extremely low, and even the currency volatility, so the volatility of the main currency, is very, very low. I think what it says, and in fact it's what we have seen in August, when you have bond market going up, dollar going up, and equity going up, usually it signals that the fact that the market are driven by central bank monetary policy. There is, people expect the ECB to do further easing, Japan to do the same, and people expect both the central bank in UK and in States to increase eventually rate, but in a very gradual fashion and very, very late in the cycle.
And the psychology at the moment is to buy on the dips, as they say,
yes.
is it?
I mean, if we look since the beginning of the year, we have seen a correction in January, I think, because there was some problem in emerging market. The same in April, the same in July, and each time the market did recover. I think, again, it's because of investors thinking that the central bank will support the market. This could change when we will see the first increase of interest rate, or when people will start to price the increase of interest rate.
Give us a favourite sector of yours at the moment, just before we go.
I mean, the banks did very well in August, and I think it could be the trend for September as well.
Yannick, thanks very much indeed.
Thank you.
And now, business-wise, you're up to date. I'm Michael Wilson in London, and you've been watching the Global Business Report from Arise News.